Hi, Michael Kolb, CFP with Evergreen Wealth Solutions, here with your August 2024 market update. The month of August was actually pretty good for stocks, albeit some of the sell-off that we had at the beginning of the month did weigh a bit on the indexes. But all three indexes ended the month positive. Best performing was the S&P 500, up about 2.4. The Dow Jones Industrial Average was up a little over 2, and the tech-heavy NASDAQ was up only 0.74, with some of the big names weighing on the index. When we look at earnings, it was a fantastic end to the earnings season. With almost every company reporting, earnings were up 13.97%, so just shy of 14%, and that's when estimates were only supposed to be a little over 8%. In addition, the technical factors were fantastic for the month, with all three indices spending the entire month over their 200-day moving average, which is very supportive for long-term growth. And it was a similar story with international markets, with the MSCI EAFE about 3.25 and the emerging markets index up about 1 2/3. And both of these indexes also spent the entire month above their 200-day moving average. When it came to bonds, it was all about interest rate expectations. It was a pretty solid month as those interest rate expectations came down. So the 10-year Treasury moved from 4.09 the whole way down to 3.91, which allowed the Bloomberg Aggregate Bond Index to rise by about 1 2/3. In addition, high yield also rose by about 1.4. So we're talking about interest rates, and that's really what this entire month has been about. There was a lot of changing expectations for the month. As we entered the month, we had an expectation that we would only have one rate cut at 1/4 point for the rest of the year. But by the end of the month, we were at the standpoint where the market is now pricing in 4 interest rate cuts for the rest of the year. This had major implications on the market, both equities and fixed income. And with the Fed trying to pay attention to both inflation and employment, with job market was slowed down to about 114,000 jobs. And at the same time, you had pretty great economic data, with GDP going from 1.4 in the first quarter up to 3%. That was above the estimates of 2.8. Consumer spending was really robust, with both personal spending and retail sales up. Business spending was up. Durable goods orders were up almost 10% for the month of July. So the Fed is sitting here trying to read all of this data and trying to figure out how to stick to the dual mandate that they have to promote both stable prices and maximum employment. Because as inflation is improving over recent months, the employment data has becoming a little bit more risky. That's led for some of these expectations that with this lower inflation, slower hiring kind of expected throughout the months to continue, that there could be a bit of volatility. If one of those picks up or decreases, it could rattle the markets and we could have a little bit more uncertainty. But I think the number one risk that we saw throughout August was the level of political uncertainty that the market is pricing in here in the US. This is uncertainty that's expected to increase as we get closer and closer to November. In addition, outside of the US, we still have Ukraine and Middle East and the economic slowdown that's continued in China. But while all these risks exist, we think that on a whole, we're on a pretty good feet. The soft landing that was supposed to take place is kind of panning out. And even if it doesn't, we're pretty prepared for either the hard landing or the no landing scenario. And as long as spending continues to do well and earnings continue to do well, we believe that the overall economic backdrop remains pretty solid. So with all this healthy growth, we think that's a good long-term indicator for investors. And while we do think that there is going to be some interest rate volatility, the interest rates have been a headwind for the past 2 years or 3 years for fixed income investors. And now with probable pivot here happening in September at the Jackson Hole FOMC meeting, we believe that headwind really could transition into tailwind. So while there may be some setbacks, whether it's political uncertainty, whether it's a global uncertainty, or it's an inflation or employment shock, in the long run, we believe that the future growth and appreciation is coming ahead. So given this, if you aren't in your right risk tolerance, you might want to speak to your advisor, but otherwise, knowing that these things are known and we are planning for them is a great place to be. Either way, reach out to your Evergreen Wealth Solutions financial advisor if you have any questions. Thank you.